You know, overall, the biggest issue really with this AI revolution is the question of monetization, particularly AI, right? It's sort of at the heart of the anxiety and probably remains a dark cloud until the most ardent skeptics are silenced. Consider Mark Cuban has jumped in with Michael Burry saying that these data centers are going to be a bust. Many will end up being pickleball courts. Meanwhile, there's a China threat from computer chips to AI providers. That spooked a lot of folks. We've talked about it a lot on this show. Now, we did learn today the White House is going to chime in very soon. In fact, according to the information, there will be a gathering of all these AI companies and the major players to review a framework. And of course, earlier this morning, Shamat Palihapitiya posted that allowing Anthropic to keep out Chinese rivals, at least alluding to that, would give them all of the tools to make trillions of dollars and to infect American politics. So to me, this is the personification, right, of the Sheila and Sharbis, which is, if you've watched the, well, I don't want to give anything away. Someone told me they didn't watch the movie. Anyway, let's bring in Spear Invest founder, CIO Ivana Delevska. Ivana, and you recently just made a table about, the pricing with OpenAI dropping their prices. But, when this came out, it was a huge blow up. And some folks, a lot of folks, led by Jensen, have rallied around open sourcing. I'm not sure if they're snapping and saying, okay, we should be using, the AI that comes from China. But where do you see it going?
Well, Charles, I think there is a space both for open source and closed source models. Basically, the closed source models will always be at the forefront of innovation, and that's why you need them. The open source models will always be cheaper and therefore offer a good alternative depending on the use case, but I think you ultimately need both.
But could the open source, particularly if it's China-led, take away enough market share that these trillions of dollars of investments go up in smoke?
Well, absolutely, Chinese open models can take up market share, but as you can see here, GPT now, with the recent drop, is competitive with Kimi. So it's really it's gonna end at the end of the day depend on the application.
So
and what
let's
you
just
need
say
to...
Claude, Anthropic, OpenAI, they keep lowering their price. We've been talking about Javon's, paradox and lower prices, maybe more users, but is there a sweet spot like oil producers say, we don't like oil to be above 80, we don't like it to be below 60, right? Because it hurts demand destruction one way or the other. Is there a sweet spot here?
Well, there is a sweet spot. Basically, each time there is a new model, it will be priced on the high end, and then the lower performing models will be trading at a discount. So I think at the end of the day, that's how we see it evolving. Mm-hmm. Every time there is a new model, price will go up, margins will go up for the companies that are introducing it, and if it's successful, they'll capitalize on it. Otherwise, the rest of the value chain will capture the upside.
Shaman also had this thing I thought was intriguing, the AI stack. They gave you credit for it, but this is not one of your specials, is it? You always put out your stacks, right? And that's one of the first times I ever saw your work, and it helped educate me. So everyone's thinking, okay, this is where the margin, the scarcity, chips, power, energy, this is where the opportunities are. Where are the opportunities going eventually, you think?
Well, Charles, I think there is still a lot of opportunities in the hardware value chain. I think the opportunities are shifting from one place to the other. So while NVIDIA and GPUs was the main opportunity 3 to 4 years ago and memory over the past year, we now see optics as a bigger opportunity. We see the semicap equipment names benefiting from this. So I think the bulk of the money, as you saw from the hyperscaler spending, is still spent on the hardware layer.
Right.
So I think that's still where the money is going to be.
What about the applications at some point?
Well, the applications at some point will drive significant value. I think the companies like Anthropic and OpenAI are really at the forefront to capitalize on that because they already have these valuable models, so they can easily add applications on top of them. The key is going to be, back to what we discussed, how long they can maintain a margin on those. So I think that part of the value chain is a little more competitive than the hardware layer where we already know who the players are. So I would say one is more cyclical, so you need to understand the cycles, that's hardware. The other one is more competitive, so you need to understand the competitive dynamics.
You wrote about Google and Amazon both producing their own chips. The numbers that are coming out for these TPUs are outrageous, and it could be a monster money maker for Google. Is this just another part of the value proposition for both of these stocks now?
Absolutely, Charles. And I think bigger than Google and Amazon is the rest of the value chain, because what ends up happening is that every time NVIDIA makes a GPU, the value chain benefits, but not as much as if Amazon or Google make it. And,
Really?
and that's because they have a lot more networking content from third-party suppliers. So this is why when Anthropic is winning, Amazon is winning, and you see companies like Astera Labs benefit in an outsized way.
Two names, the semi-cap testing names you would be adding to these on weakness, any kind of weakness right now. Chip, why do you think chip names are under pressure today?
Well, I think chip names are under pressure because memory is under pressure because of the capacity addition worries that people are now focusing on. I think there is some worries about NVIDIA and their competitive positioning with open source. I think that was a bit of a defensive move on their part.
Right.
So I think the broader chip trade is not all roses, but the semi-cap equipment part out of the chip trade, I think is very attractive. So right now people are selling like a semiconductor index that would contain these stocks, but they're not necessarily exposed to the
So
same
take advantage
dynamics.
of any weakness here to buy these specific names. Before I let you go, you like optic names on weakness as well. Lumentum, which bounced off the 200-day moving average, and Coherent. Is it just any reason that they pulled back so much other than they maybe got ahead of their skis for a moment?
Well, I think, Charles, the optics trade is a 2027 trade.
Okay.
So basically what was happening
So they're
is
definitely
that
over the skis a little bit. maybe.
Exactly,
Yeah.
exactly. So really what's happening here is that as we look into 27, investors will come back to these names. I think the competitive dynamics will be similar to how they are in memory in terms of tightness. I think there is a potential for similar type of tightness in 27 for the optics stock. So I think this is why this is probably the most exciting opportunity for us on this pullback.
It's come down a lot. It's come down a lot. So if you want to be in them, this might be the time. Ivana, thank you very much. Appreciate it. All right, folks, coming up, Kevin Warsh facing tremendous criticism. In fact, the financial media has a new term. They're telling you there's a crisis of credibility at the Fed. I'll ask Chris Lowe and Troy Lutka if they think that's true. And if so, what should Warsh do? Should he wave the white flag or stay the course? We'll be right back.